Hey guys, welcome to another video. In this series on this channel, we are going to be testing the entirety of 2016. So right now we are going to start out with Eurodollar. So let's get right into it. Eurodollar on the 4-hour, the pair is the year is 2016. We're gonna get right into it. So 2016 tends to be a relatively, I don't want to say easy pair, but it's not too difficult either. So that's why we're starting out with 2016, just to kind of give you an idea of how the strategy operates really. Okay, so let me just drag that away. I'm going to be explaining some of the trades that I take. I'm also going to just let it play out a little bit because there's no way for me to actually talk for 20 to 30 minutes while I'm testing one of these pairs. So right now we have euro dollar. We're going to look for a short position over there. It's a fairly simple trade that does hit break even because we move our stop to break even at 1R, aka the 0.5 level. I'm going to be taking a screenshot, placing it in the community. And there we go. Oh shit, I did not mean to do that. There we go. That's our first break even. This is kind of the way I like to collect data. So I like to just have it split screen, have Discord on one end of the screen, and on the other hand of the screen, I'll just have my FX replay. That's kind of the way I like to test. So let's see. And anyways, by the way, if you guys wanted to check out the strategy, you can download it for free. The link is down below in the description. You could also always reach out to me on Discord. My Discord should be somewhere up here. So if you want to check that out, feel free to reach out to me. But anyways, enough talk. Let's continue backtesting. So far, a little bit choppy price action within the month of January, which is common for January based on my data. In the video that I posted a while ago, you can see that we tested over 45,000 trades. So you can check that out. It should be somewhere on my channel. I think it's the most recent video. And we basically tested over 45,000 trades just to kind of show you the results that you can get on average. So anyways, let's continue. This would have been a valid trade that I just missed out on, but I think we would have never gotten tapped in anyways. So that's totally fair. Sometimes the platform is a little bit laggy. You're just going to have to get used to that. That's just the way this platform works, the way this platform operates. It's a little bit unfortunate because it can be quite slow, but there's just no way around that. So right, we have not gotten a trade yet, and it's February. So far, a little bit of a slow year. This is our first trade, but I'm not sure if we're not getting to that level. So a common question that I get is, if you have a losing pair, what do you do? So basically, a losing pair doesn't really mean a thing in the markets. So as you saw in my last video, a losing pair can still mean that you're extremely profitable. You can have 10 losing pairs if you're trading 28 pairs and still come out very profitable. So the second trade that we have is another break even, which is totally fine. One thing that a lot of people forget, which is very important, is to make sure that you maintain a consistent level of zoom when you're looking at the market. So it's really easy for people to lose track of that and change the zoom level, kind of like this, you know. So they'll basically be changing their zoom level, adjusting it, and before you know it, they're looking at the markets completely different. And that's one thing that you really want to avoid, because it can definitely skew over your data. This is a valid trade over here. Let's see if we get tagged in on that. So ultimately, this strategy is extremely simple, and the strategies, like I said, you can download it in the description, but it's also I've made a couple of videos about it, and it's just an extremely simple strategy. There's not a lot for me to talk about. A lot of things are hard to test because they're so complicated, and the strategy is just extremely simple, so it's not really difficult to test it, which is, you know, what makes it a lot easier for me as well. right, see another trade. I am zooming out a little bit. This is something I have to pay attention to for now. But so far, it's been a relatively slow year. So I'm literally just going to make this a series. We're going to do one or two pairs a week, and it's just going to take you guys along within the journey of testing. So I'm deleting this trade because it got really close to my entry, but then got really close to target. So for me, that trade became invalid. So we're going to be looking at the new trade down here. We are now in the month of April, so that is the 4th month of the year. And let's see what we get. Kind of a similar situation here. You see how price gets really close to target, to entry, then gets close to break even. Now we did eventually get tapped in for another break even trade. Let's continue. So far, like I said, euro dollar in 2016 is a relatively slow pair. Do remember that a slow pair is totally fine. Like some pairs you might get 20 trades, some pairs you might get 5 trades, some pairs you might, get 30 trades. So it's a really depends on the pair that you're testing. And sometimes you might get plus 20R, sometimes you might get negative 5R. And it's all valid, so it doesn't really matter. A lot of people will panic and be like, well, shit, I got, minus 10R or minus 5R. That's totally fine. There's a common misconception that you need to have a high win rate on every pair. And that's really just not the way that it works. Okay, so that's our first winning trade over there. And we see that we have another trade right after that, basically. Another short position. Right now we are in the month of June. So that is the 6th month of the year. Basically the same thing here. Getting relatively close to entry, then getting close to target means that I am going to be deleting that trade. I'm going to be looking at a new position like this long here, for example. It is a little bit discretionary, when you're deleting the trade. But once you've tested thousands of trades, it becomes really easy to kind of get an idea of where to cancel a trade. So that is plus 3. That is a win. There is a good chance that win would not have taken you in the live market because of the news, and news doesn't always tap you in. So, right, let's see what we got. There's a really large long position here, which is a little bit too big for me, so I am going to be not going to be taking that one because I don't like being involved in really large positions. It's not the way I've tested my strategy. I always test my strategy being a little bit more aggressive, focusing a little bit more on the smaller trades. So a little bit more of trades like this. Okay, that is another win, plus 3. And then let's see what we get. There is a fair trade here, but there's no real FEG except for the gap, which some people count that as an FEG. It's totally fair. So there's no real trade. And one of my rules is obviously that I need an imbalance. So I'm not taking that trade. Now we are going into the summer months, and as you guys probably know, the summer months are notorious for being very slow. But anyways, let's just see what we can get from this month. You see that the price action is very different, obviously, right? You're trending a lot more, and then once you go into the summer months, it usually is a little bit more sideways. So, but anyways, let's see what we can do for now. So if you guys want more data like this, we have been backtesting this for well over a year and a half now in the community, and we've been sharing it every week. But if you guys want to see all the data that we're collecting here and all the screenshots and learn from it, then you can check that out by joining our community, in which we basically share all of this. It's another win. There is a chance that this one would have taken you out of break even, to be totally fair with you. So that's why, data is never 100% accurate. I always want to keep that in mind. Like data, yes, it's great and you need to gather it, but it's not always going to be 100% accurate, if that makes sense. Like there's going to be times when your data is just a little off because news, slippage, spreads, stuff like that, basically, right? You guys get the ordeal. All right, we have another trade down here. So some people wonder why I'm not taking the higher high, for example, the highest point here. And the reason for that is because I like to be more aggressive. And I believe if you want to be more aggressive, you're taking trades from the most recent high or low. If you want to be more conservative, then you're going to be taking trades from the lower point or the higher point, basically the swing point, the extremes is what we call them. Let's see. So far, we have not had a losing trade yet. We're going to have to mark it into that one because we did a little too late. Oh, there we go. I jinxed it. We do have a losing trade now. And what's funny is once you start backtesting and you start doing it a lot, and you notice that your results are pretty solid, eventually you start to understand that trading is nothing more than a game of probabilities. We have 2 losses in a row now. So you see how we have multiple winners in a row and now we suddenly have 2 losses in a row? There's a lot of people who will panic and be like, shit, what am I doing wrong? And the answer is nothing. You're literally not doing anything wrong. You're just letting probabilities play out. It's the same as doing a coin flip. And within that coin flip, there's a 50% chance of winning. And if you toss that coin 10 times in a row, it doesn't mean that you're going to get heads or tails 10 times or 5 times heads, 5 times tails. It means that there's a good chance you might get 8 heads and 2 tails. And it's the same with trading. At the end of the day, it is mainly probabilities. This is that is a valid trade, but it looks like I missed out on that. I was a little late, so we're going to delete that. And we missed out on what would have been a break-even trade, but we do get a reversal trade right after that. Right now we are in the month of August. Go. Okay, another winning trade. To be fair, I believe that this one wouldn't have tapped you in, which is why I always like to calculate in what I call error margin. So at the end of your data, let's say you've collected 1,000 trades and the total amount of R that you've gained is, let's say, 200 or 500 R. Then take off 50 to 60 R and just calculate that in as what we would call error margin. As in, you would make mistakes like this, for example. I missed out on this trade once again, which would have been a break-even trade. But you'll make mistakes for sure, and that's one thing, or the market will make mistakes too by, well, not necessarily mistakes, but slip you out or have slippage, etc. And all of those things combined ultimately lead to a lower R gain. And that's just stuff that you really need to take care of if you're going to be trading this strategy or any strategy for that matter. All right, we are in September now, which is the 9th month of the year. So far, a little bit choppy price action. The after summer dip, basically. September is still considered the summer. At least it is here in the Netherlands. Let's see. So I like to delete my trades as soon as I basically hit my break-even level or my target, and I've not tagged it. Let's see, losing trade over there. So we are up 15 R right now for the year, which is obviously extremely solid, but that all can change. And that's what I mean when I'm talking about probabilities, right? Like, it's all a game of probabilities. If you take 5 losses, don't panic. There's really no reason to panic because that's really just part of trading. Now we're taking another loss here, and I'm not really panicking about it. Yes, because I am up 14 R as well, but also because I just know for a fact that I can afford to lose 10 times in a row without getting into any serious problems. I can afford to lose 12 times in a row even without getting into any problems. So I missed this trade. This would have been a break-even trade. I do miss out on a couple of trades like that, and that's why I like to calculate in the error margin as well, because some people will replay their trades, and that's just I mean, you can obviously if you really made a mistake, but 9 out of 10 times you're just hurting yourself because there's a good chance that if you miss that trade in backtesting, that you might have missed it in real life. Maybe you're at school, maybe you're at work, maybe your data fell out, whatever. It doesn't really matter. There's just a good chance that you miss a few setups here and there. Okay, October. We are in the 10th month of the year right now. I do believe that I would have missed a losing trade because this would have been a trade that I would have taken that I would have lost. So that's part of it too, right? You will lose trades. You'll miss out on losing trades. You'll miss out on winning trades. And it's kind of unavoidable. I mean, it's really unavoidable. So yeah. So one more thing. We are approaching the month of December now. I always quit trading December 15th. So whenever I'm collecting data, I always quit collecting data after December 15th because I just don't trade after December 15th. It's been like that for years. And that's why I always stop backtesting as soon as we hit that day. Because keep that in mind too. You might have your best month in December or your worst month in December. But in reality, you will be celebrating Christmas with your family or the New Year's Eve. And your data still shows you that you would have been testing that period. It's the same in the summer. If you know that you're leaving every September for 2 weeks going on a holiday, then make sure that you don't test that, because if that's the date that you're always going to be gone, then your data is not going to be accurate. Okay, that is another break-even trade. And then we are approaching December, and like I said, December 15th is right around the day where I stopped trading. So we are now at December 8th. And this is a little bit too large of a trade for me. All right, this is where I stopped trading for the year. So that's it for now. Let me just skip to the end of the year. Let's see the analytics. About a 60% win rate, very solid. Obviously, not every year is going to be like that. And not every pair is going to be like that, but that's one thing that I'm going to show you guys too. Not every pair is going to be profitable. And you guys will understand this, that not every pair is going to be profitable. And you'll see it in this series. You'll see that not every pair is going to be profitable. Anyways, for now, thank you for watching. I'll see you next week, and we'll take care of another pair next week. So see you guys. Take care.